So I've gotten some questions about a new mortgage insurance bill, so I thought I would chat about it. It's called the Mortgage Insurance Freedom Act. It's currently in the House for voting. It actually came back out again this year from last year. Did not get passed last year, but we shall see. This bill would specifically affect FHA mortgages and whether or not they will have to carry mortgage insurance for the life of the loan. So just as a quick reminder, there are multiple types of mortgage insurance, and we are specifically talking though about monthly mortgage insurance premiums. Those are held by conventional and FHA loans. Your FHA loans, unless they put down 10% or more, will automatically carry for the life of that loan. If they put down 10% or more on an FHA loan, they will still pay mortgage insurance up until year 11 when it will finally cancel, or unless they refinance into a conventional loan at some point. Conventional is your typical mortgage insurance monthly, where they will have mortgage insurance unless they put 20% down or until they reach their 20% equity mark, either naturally via their loan and original appraisal or new appraisal that they get. Then we have VA and USDA loans that do not have monthly mortgage insurance premiums. However, they both have their own upfront premium, or for VA, it's called a funding fee. So they collect a fee upfront that's financed into the loan. FHA also has its own upfront mortgage insurance premium as well. But again, we're talking specifically this time about monthly mortgage insurance and the options. So if your buyer is looking for a true no monthly mortgage insurance program, that's going to be USDA or VA. If they're looking to get rid of mortgage insurance faster, that would be a conventional loan. The closer they can get to that 20% down payment, the better they're going to be for having very little to no mortgage insurance. They can technically prepay the mortgage insurance as well. So I do have a lot of buyers that go like, well, I'll put 20% down so I don't have mortgage insurance. They can technically put 10-15% down and pay the remaining mortgage insurance premium up front if they want to, so they don't carry it. I do remind all buyers though, if they go to refinance pretty quickly, that mortgage insurance premium that they've paid up front does not carry over again. So they would be back in the same scenario where they need 20% equity, or they'd have to prepay again that same charge or carry monthly mortgage insurance. So that's not something we do really super often unless they're really happy with their rate and they're gonna stay there for a while. And again, if they are okay with mortgage insurance, then FHA could work for them. It can have lower interest rates, but that mortgage insurance is going to be there for the life of the loan, more than likely. But again, we've got this new bill that is in the House for voting. We will see if it makes it through. Essentially, what this bill is saying is that FHA has collected more than enough mortgage insurance to cover them for any mortgages that might fall out, which is really the purpose of the mortgage insurance. It's to protect the lender in case a home is foreclosed on or short saled. And if you've seen what FHA can collect per month in mortgage insurance, you can see why they're saying that they're at 600% of the reserves that they need technically. So the bill would essentially make it the same rule as conventional, where it will automatically cancel once they've gotten to 78% loan to value, or at 20% equity they can request it themselves. So we will see. That would help out a lot of FHA buyers. FHA can be a wonderful, wonderful program, but that is one of its biggest drawbacks, is that continuation of monthly mortgage insurance. So we will see what happens. If you have any questions though, or have clients who have questions, you know where to find me.